Hi everybody, this is Doug Robertson. I'm from Top Gun Options, bringing you a advanced trade alert today. Right now I'm taking a look at Deutsche Bank. Now, Deutsche Bank has been had a little bit of volatility put into it. Its implied volatility is high due to some issues out there, obviously with the European debt, the Greek sovereign debt issues, and a few other things floating around. And the Moody's also recently came out with an alert that it was on a list of banks that they're considering rate adjustments on, the credit rating adjustments. Now, it's one of a great big list. And so we've got a couple of things that are going on in Deutsche Bank right now. Now, one of the things that does is it tends to increase the implied volatility. What we have to decide is the implied volatility higher than what the risk actually represents? At this point in time, we've got an implied volatility of over 50% and a normal price movement, historical price movement on this stock of about 25%. So the implied volatility is about twice as high as it normally is. Yes, there are definitely risks out there. This trade should not be taken lightly. It's not a simple trade, but it potentially is a very good profitable trade for us. What I'm looking to do is take advantage of the high implied volatility on Deutsche Bank and using that to generate some premium for us in an iron condor. Now, let's do a quick run through of this. I have a spreadsheet I use for analyzing these things. Process I'm going through is pretty straightforward. I know the environment that Deutsche Bank is in, and I believe that the implied volatility is overpriced. There's obviously some risks on that, so we do need to be careful. But given the conditions, I think there's a good possibility of a decent trade here. So what I do is I do a quick analysis and decide what I think the forecast volatility is. All I'm doing is I'm making a measurement across the historical price movement of this trade, and then I'm adjusting it for the current risks in the market. Historical volatility, 24%. I increased that a little bit up to 27%. This allows me to do some quick analysis on the trade itself to decide whether or not it makes sense. A couple other things I had to put in here. The current price, when I was analyzing this, was $43.53. I did this for 20 iron condors, and the expiration date is the March expiration, monthly expiration for Deutsche Bank options. Going through setting up the trade, first thing I did, kind of going on a basic strategy that I use, look for the first strike with on the call side with a delta between 10 cents and 15 cents. In this case, the 50 strike was at just under 10 cents, so I took that one. I'm protecting myself with a strike 1 out, so I'm going with a short call of 50 strike and a protective long call of 52. On the other side, I'm looking for strikes to balance this out, a very, very similar delta. This puts us at a strike of 37.50 on the put side for the short put and 35 for the long put. Entering in the prices, and by the way, these are just bid-ask midpoints. They should be fairly close to a executable price on the market. We come up with a credit of 37 cents. Now, a couple of quick little things here. The spreadsheet does an analysis of what's going on this stock. Analyzes a couple of different things. Lays out the trade itself, looks at what kind of profit we're going to get, what kind of risks we're going to get. Right now, this trade with 20 iron condors gives us a credit of $740. Max risk, worst case risk on this trade is $4,260. We got a return of about 17% for 18 trading days. It's pretty reasonable. Based on our estimates of forecast volatility, we've got a 95% chance of hitting that 17% max return. Very good. Happy with that. We also have a 96% chance of hitting break even or better. So if you've been in my class, you'll know that I love expectancy. Expectancy basically tells us if we were to take this trade over and over and over again, the probabilities worked out, what could we see on average? $635 or basically a 15% return. They all hit my criteria. I'm happy with that. It's a trade that I've made a little bit smaller than normal because it does have some outside risks to it, but overall, it looks like a decent trade. Now, a couple of really basic things here. If we need to adjust this, I don't want this expectancy of this trade to get below 3%. It's currently at about 15%, gives us plenty of room to work. That means that we have a low limit of 39.38 cents for the price. If the price of Deutsche Bank starts hitting that, then we are going to need to consider adjusting this trade. And a high limit of 46.88 cents. Two good criteria. We know when to make the move. We know when to make the adjustment. So I'm putting this on. Thank you very much for watching this trade alert. And please join us at Top Gun Options. We go over these things in our classes every week, putting out trade alerts all week. Encourage you to check out topgunoptions.com and consider joining us. Thank you very much.